there is a shocking inverse correlation between the DXY, the dollar index, and the price of Bitcoin. And what it's showing now could have wild implications for the future price of Bitcoin and all cryptocurrencies, really, as well as how much longer this cycle might just last. Interested? I know you are. Let's get it. So first off and foremost, what's a DXY, Lark? Well, that's the US dollar index. This is a measure of the value of the US dollar relative to a basket of foreign currencies. Largely, it shows, does everybody want dollars? Does everyone want to risk off, or does everybody want to go and buy all the other stuff, right? Bitcoin, of course, being a currency, cryptocurrencies. It's in the name, guys. It's in the name. They're currencies too. Now, let's go for a little history lesson before I tell you about what could come next, because you need to understand where it has been and how it's correlated in order to understand how that could inform our future. So, first off, this is the US dollar index chart. We have the 50-week, this is the weekly chart, the 50-week exponential moving average, yellow line in the chart, the 100-week EMA, pink line, 200-week, blue line. So let's go back to 2017's wild bull run. You can see let's go back to January. In January, the DXY topped out. The entire year of 2017 was a wild, insane, just manic bull run. A whole year of basically up only with giant volatility and horrific gut-wrenching crashes every few months. It was a wild time to be in markets. From this point down to here, we saw huge rallies. Now, as we started nearing the end of the cycle, we started seeing a little bit of strength come back into the dollar. That was a false rally leading into this. So the Bitcoin topped on the week of 18 December 2017. You'll notice that also correlates with the DXY losing the 200-week exponential moving average. Over the next month, we saw altcoins reach their peaks. That again correlates with a bottoming of the DXY in late January. After that, the DXY starts ranging sideways. We find our bottom. People start freaking out, getting out of these extreme risk assets. The bear market starts here. We see big strength building back in April. And basically, you see the DXY go on a grinding rally for a few years. And yeah, we had some excitement here in 2019. Interestingly, hey, here's a fun note. This is basically the week right here that Bitcoin topped in 2019. That's when we had just one little tiny candle close under the 50-week EMA. Crazy stuff, right? The bottom of the market came in when we saw this big blow-off rally here. Wild volatility, of course, leading into the COVID crash. Big rush to dollars, of course, to safety. That marked the bottom for Bitcoin. Bitcoin bottomed right here. The DXY topped right here. What happened next was a continual decline. In May, right around the Bitcoin halving, we lost the 50-week EMA for the DXY, and we started grinding lower. Now, it's interesting. In July, we lose the 200-week EMA, blue line. Then we start grinding lower. And in October, we really start taking off. And you see a massive deceleration in the DXY going from 93 all the way down to 89. That coincides with the first major market peak right here. Price of Bitcoin topped around $42,000, $44,000, whatever it exactly was. Very interesting to see a rally of strength here before correcting once again. So this is when Tesla announced their Bitcoin buys, all that kind of stuff. China banning crypto, all kinds of stories came out during that time. And we went into our final rally. Now, right around here is when the price of Bitcoin peaked at $64,000. And right around in this area is where the altcoin market cap peaks. So you see, it's not a perfect correlation, but you can definitely see the direction that it goes in. So we got a double bottom here on the DXY, which then started to rally much higher. This is when the bear market, mid-cycle bear market, let's say, approximately happened. So you had, May, June, July were terrible months. We had a 50% drawdown in the price of crypto in those few months as the dollar index was bottoming out here. Then we saw that rally back up. Now, what's interesting is that we did get a new high price right around here. So that was around the El Salvador news and stuff like that. For all intents and purposes, this is when the pi cycle and stuff like that topped here. This was sort of the quote unquote true cycle top, even though we later got a slightly higher price based on that sort of you can call it a bear market rally, if you will, even though it got us to a new high market price of $69,000. Now, what happened after that, of course, was utter chaos in markets. As you probably remember, if you were hanging around, we had a gigantic rally of strength here for the DXY, absolutely wrecking risk assets. Stocks plummeted like no tomorrow during this year. Crypto coins, my goodness, it was a reckoning beyond belief if you weren't around back then. Topping here in September. Now, this is right around the time, by the way, that BlackRock launched their private Bitcoin fund. I don't know if you guys remember that, but they almost timed the bottom. They couldn't have foreseen the coming FTX collapse that happened only a few weeks later. But this is right around where Bitcoin bottomed out at. Not quite hitting the top, but coming pretty gosh darn close. And had we not had the FTX collapse, that probably would have approximately marked the top of the DXY, that's correlating to the bottom of the Bitcoin bear market. Then, of course, we saw huge volatility playing out over the last couple of years here. And now what do we see happening? Well, more on that in a second, but let me tell you real quick about something very important, and that's the Wealth Mastery newsletter. Guys, if you're not signed up to our weekly newsletter yet, you are missing out. Every single issue, we are working hard to provide you with massive value, meme coins, altcoins, charts, technical analysis, the latest news, much, much more. Our 140,000 plus readers a week love it. I'm sure you will too. So check it out. It's free. It's free, by the way. So definitely check that out. Link down below in the description of the pinned comment over on X. Thank you very much. Now, back into it. Let's talk more DXY. What comes next? What comes next? Well, that is a very, very interesting question. Again, we need a little bit of a historical perspective here. You see, from back here, 2017, from the time that we lost the 200-week EMA, despite a fake out rally here, to the bottom was 29 weeks. Okay, so a little over 6 months. If you look back here in 2020 until the DXY finally bottomed out, was 46 weeks. So nearly getting pretty close to a year, right? About 10 months. So 6 to 10 months approximately from the time you lose the 200-week EMA, blue line in the chart, until the time that you see a bottoming out. Now, also important to note here how quickly we bounce back up when we finally do bottom out and retake that 50-week EMA. I mean, that's probably the last call for alcohol. Get the heck out now before all your coins go to zero, essentially. Hopefully, of course. So obviously, in 2021, we did get that second rally. So it's not a perfect measure by any means, but it does give you some indication that strength is coming back into the dollar and people are positioning themselves accordingly. Now, why are we even talking about the DXY right now today? Because of this. Because right now, we are losing key support on the 200-week EMA. You see it bounced as support here in July. You can see it bounced as support here. July 23. You can see it bounced as support here December 23. Now we're losing it on the weekly. Still a day and a half till that weekly candle closes. But likely, this is the start of a decent downtrend for the DXY. And if that is the case, as we have seen in previous examples, when we have a big loss of the 200-week EMA, that is a bearish time for the dollar and a bullish time for risk assets, but it doesn't last forever. This could be the final phase of the bull market, okay? We've seen huge accumulation, we've seen huge volatility, all that kind of stuff. Now could come the big pump time. Let's see. Obviously, we still have a lot of things that can go wrong either way to say that it could or could not happen. But still, if this plays out, well, we're looking at a possible Q1 top. So if we were to say, okay, it's going to be about 30 weeks. Back in 2017, it was 29 weeks. It's 44 weeks time after that. Let's just say about 30 weeks as an example. So where does that take us up to? That takes us up to mid-March next year. Maybe it's a few weeks before, maybe it's a few weeks after. It's not a perfect science. But with all the stuff going on, with how many other sort of correlations we could see to around that time, it becomes a very interesting place to watch out for. So the next 6 months could be the very exciting, the final phase, if you will, of the bull market. This is the part of the bull market that everybody talks about. Essentially, we've been in a bull market since November 2022, even if it didn't feel like it for the first 6 months. We've had all kinds of bullish things happening. Prices have gone crazy. But that massive markup phase that happens in markets tends to not take a giant amount of time. And just look at 2021, basically October to April. That was it, short. The biggest mania phase, the biggest markup phase often doesn't last for a long time. And you will either remember to take your profits during this period or the market's going to take them away from you. And it happens very fast. And if you don't react in time, all your money's gone. Okay? Thanks for watching.